Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. Hope you're having a phenomenal day, had a wonderful weekend. We're going to take a look at some important stuff here. There's likely some fundamental catalysts causing the price action for Bitcoin to pull back. I still think we're definitely in good shape, but Trump did warn Europe to get their act together on immigration and claimed it was facing an invasion from immigrants. So there's that. There's also another Trump tweet, as per usual, stating that we're going to be setting off a tariff for the rest of the world and that's what they have to pay. So anyways, it's just normal, standard, fundamental catalyst pushing the price action down. It's also that resistance range of 120,000, so we're going to discuss that. And what we also want to look at here too is some important things that are kind of coming into play here. First of all, we got an ascending retest here for Ethereum for its ascending trend. Solana's in a very similar space here where we're entering our support range. And then SUI of altcoins here is entering its nice little support range too. So we're seeing these nice bullish backtests of these nice key level resistances turn support. So most coins are looking pretty solid outside of XRP, of course, with a nice bearish type of flag pattern. Keep in mind, folks, we don't trade patterns alone, but they do kind of incentivize the price to go in either direction based on just the overall shifts in momentum that we see. So while most coins are pulling back right now, that's just something to be mindful of. Let's go ahead and actually start with some back-end data here too as well for our crypto market overview, just kind of noting a few important things. So let's just go ahead and make sure we get a little refresh here and take a look. And as per usual, we're seeing more money flowing into Ethereum than Bitcoin. I touched on this over the weekend. It's a very standard thing right now where we're seeing money flowing into altcoins, and Ethereum is typically that catalyst to look out for when alt season is on the rise, or alt season index is increasing, which we're seeing here. So even though we're at a 39 here for today so far, we are seeing an average of 40 to 50 is kind of the standard. So this pretty much implies here that we're still in pretty good shape, and that all in all, even though market cap is pulling back to 1.55 trillion for altcoins, that's still a very good sign. Okay, so I wouldn't be super concerned with this capitulation that we're seeing here today. It's fairly standard considering, and I'm going to explain why I feel like we're in pretty good shape. And this is actually a good sign too, because we're still ranging between 116 and 120. And we're slowly seeing our fear and greed index taper off. So it's kind of one of those things where FOMO is starting to set in as greed pulls back. People are going to start getting more more apt to buying, and we're going to start seeing these dips getting bought, which we've probably already seen honestly. But that's just something to kind of be mindful of. Taking a look on the back end though, here's something we want to touch on. Here is basically altcoin dominance. Obviously, is pulling back as Bitcoin dominance is slowly increasing. But the overall sense here is that Bitcoin dominance is coming down. And we can also recognize too that money's flowing into stable coins. This is a stable coin indication here, stable.c.d. We can see this is kind of just letting us know here where the percentage of stable coin is increasing. So money's flowing away from alts, going into stable coins. And once alts find their bottom, or Bitcoin finds its bottom, because once again, they're moving pretty much significantly with each other or consistent with each other, and we're going to start seeing this pull back. But for right now, money's flowing into stable coins, and that's kind of the consensus for the moment. So let's take a look at the back-end liquidation data for Bitcoin, get a foundation of what's going on. Then we can check out some other altcoins too, and kind of get a perspective on where we're at with the overall sentiment. Because liquidation, while it's not like perfect, same thing with CME gaps too. We're going to discuss that here shortly. There's still a relevant factor. So some people say a lot of it's irrelevant, but the truth is you're just building a case to see if it's worthwhile taking a trade in either direction. So right now, that's kind of what we're looking for. And if you're watching this a few days later and you're like, oh, he was wrong, that's totally fine, because it happens all the time. But the truth is I'll probably be right here in the short term based on the simple fact that these things consistently change, but they give us little transitionary type of indications of where things are going. Okay, so take a look here. Open interest on the right here, we can recognize 117,000 is that next area of support based on open interest. So we have the most amount of accumulation in the last 7 days at 117, outside of course, that 115.5 level that we talked about last week. All that said, open interest is good. Liquidation long delta is basically telling us that we are at about 4 billion in longs versus shorts right now, which basically implies that people are buying this dip. Even though the price is pulling back, this number is still remaining quite high. So that's generally a good sign. It shows that 118,000 is supported and likely going to be a good key level support. Once more, open interest secondary to that 117.2, even number 117,000. We take a look at liquidation though. For the heat map, we can recognize that as per usual, 120 to 122K above the price, solid amount of resistance and or liquidation, relatively the same thing. And then the same thing here as well with 114. it's at lower level. So that's kind of where we're at there in that regard. When we look at net longs versus net shorts, we can see here that there's a heavier concentration of longs at 120,000. Oh my gosh, I hate it. I hate seeing this. This is just terrible. These are breakout traders, folks. 120,000 taking a long. Who does that? Like, it's a range. You got to wait for it to be broken and retested first before you take a trade. I teach that all the time, and not only in my trading academy, but every single video I make as often as possible. Shorts are also underwater here at 117,300. So we've got kind of an upside down situation where there's no real profitable position based on the local range. In the last 7 days, most people are underwater in both their longs and their shorts. That's how tricky the market is. That's how ridiculous it is. This range just destroys a lot of people's accounts because most people are not good at range trading. Now, I'm not perfect by any stretch, and I prefer not to trade ranges, but when I do, in this case, for example, 120,000 would be an excellent place to short. 116,000 is an excellent place to long. That's kind of the concept. We're right there in the smack dab in the middle of it. So that's kind of what's going on here. This is long versus short delta. Basically, you're just implying that we are we're kind of spread out. We got a lot of longs and shorts kind of averaged out in different places. So that doesn't tell us too much. You can disregard that guy. All right, let's take a look at the daily time frame and work our way down. In fact, before we do that, we'll look at the weekly here in a second, but I do want to peek over at our not Bitcoin dominance, but CME futures, and just touch on this here once more. CME gaps are not always filled, but oftentimes they are. The statistical probability of them getting filled at some point is pretty high. So I'm still leaning more towards us seeing that 115K range, but you don't need to necessarily run for the hills per se. At this point though, our most recent fair value gap, let's see here, it was, because once more I had this open previously. We had the CME gap, what is it, 118.3 upwards, it's mostly filled, 118.7. So honestly, this CME gap is a majority of it filled already, and that was just the one that was created over the weekend. See, Friday we closed, and Sunday we opened right here. So that's kind of the difference there. And once more, that's kind of why fair value gaps exist, because CME futures don't trade all the time. They only trade, Sunday through Friday with a little bit of a time off throughout the weekend, and like an hour break each day, but it's irrelevant. Suffice to say, we can see that gap is on its way to getting filled. So once that occurs, I'll send out another update. But the key takeaway here, I think, is important to recognize 114.4 to 115.7 still exists, and that could be the next area of consideration. Once more, we have to lose our range to see that. Even before here, when we saw the price come down to 115.5, CME futures was not on the same page there, and it didn't have the same chart. So that's kind of what we're looking at there. All right, so let's take a look here at the weekly time frame and kind of recognize here that there's a pretty monstrous fair value gap as low as 110,500. So that's really close to our previous high range, because we ranged for multiple weeks. We hit 110,000, or just under 1, 2, 3, 4 weeks out of 7 before the price broke out. So if we do come back down, that's a key fib level as well. It's our 0.5 fib level. 110.5, I would say, was our extreme worst case scenario on this pullback. That's just kind of something to be mindful of on the weekly. We also recognize too, when we look at some of these indicators, we do see a weekly divergence here on stochastic. We remained under 70 in the RSI, which is actually a good sign, and MACD is not quite diverging. So we got a very, very early premature sign letting us know that there's a shift in momentum occurring. What we really want to pay attention to, though, is today's daily closure, to see if we close in a bearish engulfing candle, which we're seeing happening right now. So once more, closing below 118,000 today pretty much indicates we're going to see 116K. That's kind of how it works in general. Anytime we see that in the recent past, we closed below 118 here, we inevitably came down. Closed below 118 here, same day we came all the way down. So just keep that in mind. That's kind of something that is pretty consistent. And a bearish engulfing candle basically just tells us that today's trading session so far has been more bearish than bullish, and that the bears are controlling this price action. Therefore, we have more incentive for the price to go lower because there's more selling pressure. Okay, and that's reflected here as well with the volume candles. Other than that, daily time frame just has kind of standard indications letting us know that we're range bound, nothing really else to note there. So that's Bitcoin in a nutshell. Hopefully I explained that correctly. Let's take a look here over at Ethereum and kind of see where we're at. Now that we know where the baseline is for Bitcoin, it's going to be a little easier to identify some reversals and or trend bottoms when it comes to altcoins. Okay, so when it comes to Ethereum, this is a unique one. Liquidation delta is tapering off, which is good, but generally speaking, Ethereum once more has a very significant amount of ETF inflow. All right, so that's a good sign that shows sustainability, and the likelihood of the price action for Ethereum pulling back super hard is lower. But once more, there's a lot of meat left on this bone too. So if the bottom drops out for Bitcoin, we could see that happen. But altcoins, believe it or not, are actually holding together very well today, outside of outside of any large corrections. Most of the profit from the weekend is being taken today. Okay, so my speculation is our local highs are going to be in the new lows, and we'll talk about that. So let's jump into the back end here. We want to recognize here first of all with open interest, there's pretty big chunks at 3750. Between 3750 and 3700. Let's just make it easy there. There's just a range of that $50 range from 3700 to 3750. Nice amount of open interest there, kind of letting us know that we have some support coming if the price pulls back. Furthermore, too, we can see liquidation long delta looks like it's at break even. Let me refresh this here. I think I see a little red. No, I don't. I'm wrong. It's at 200,000 right now. That's actually not a lot, but the truth is there's more longs and shorts in Ethereum right now at this point, which is no surprise. It's pretty much been the common theme here as we see a lot of shorts getting destroyed over the weekend. At this point, not a whole heck of a lot from a liquidation standpoint that's telling us we're going to go up or down, just kind of letting us know it's fairly spread out. I think open interest is probably the best indication because over the last 7 days, we see the most amount of positions open between 3,700 to 3,750, and they're going to guard their position as the price goes down by likely adding to their position. So that's kind of where we're at there. Okay, so let's take a quick look here at a few other things as well and just double check. So here, let's go ahead and move on to the 4-hour time frame to see if there's any divergences. We're still honoring our ascending trend, our short-term ascending trend for Ethereum, and we also got the fib level here at 3770 and 3726. So we do have what's commonly referred to as confluence. That's just an area here that kind of lets us know that we have a lot of support in this range. Okay, so a lot of support in this area there, including volume support. So we should experience a bounce with this being a local high. I'm willing to speculate we're going to see a bounce off this 3,700 to 3,750 range if that's hit. Okay, so we'll pay attention to that guy and just kind of recognize that we got some support below the price action. But generally speaking, this is mostly a good sign. So I don't see anything super crazy out of the ordinary here for ETH, letting us know we're going to see a significant correction. It really just depends on how much lower Bitcoin's going to go. Okay, Bitcoin keeps going down, we're going to see that natural knee-jerk reaction there for it. Okay, so let's take a quick look here at the other charts. Take a look at Solana, actually, because this one has a kind of a curious chart here. Let's talk about that. Starting with the backend data for Solana, we want to recognize here that we are at 189 for the local area of open interest. It basically reinforces resistance at 190. So we do see 190 again. It may be a good consideration for a short. Just spitballing here, of course, based on the fact that we have a shift in momentum with longs versus shorts. There's more shorts in the market now than longs. Majority of the local liquidation has been swept, and it would seem sensible that 180 to 183 is going to be the next target there. Furthermore, we got a pocket down at 175. So let's go ahead and see here where those are at. So 175 is this guy right here. It's the lower end of the support range. And right there is the upper range. So truth be told, the support range from before is still likely to hold as a new support range moving forward. That's basically just an accumulation of volume with the local highs, as well as previous areas of confluence and open interest in that range. So all that being said, what does that mean for us here? Well, we're still honoring ascending trends. We really have no reason to short this coin just yet because we haven't broken any type of trend lines. And even though on the daily time frame, if I recall, yeah, we're still above all moving averages, this is still a pretty good situation. Now, you could argue that we're starting to diverge in the MACD, and that's true. This is a pretty long ascending trend. And the odds of it breaking is high if Bitcoin continues lower, which 116,000 should be the likely next target if we lose 118, right? So into that impression, it's probably best to wait to this lower area of the support range to be tested first, and then consider a long instead of trying to FOMO in right now, because you're trying to catch a falling knife, if you heard that term before, because the price is just pulling back and you don't really know where the bottom is. We know where the tentative bottoms are, but they haven't been tested yet, so we don't know, right? So that's kind of where we're at. So Solana is kind of iffy. I would say wait. It's probably the best call. SUI, on the other hand, this looks like we're dumping pretty hard, but we're also entering our support range. So let's discuss that. Take a look here at SUI on the back end. we want to recognize that there's a lot of open interest at 430, so that's the local high. And once more, local bottom is roughly $4. We see plus or minus 5 cents from 395 to 405 at that $4 average range for open interest. However, liquidation delta has shifted bearish, so we got more bears than bulls controlling the market, the price action right now. And then obviously we see a chunk of liquidation at 380 between now and 380. So I'd say a worst case scenario would be 380 for us if we lose $4. I don't think we're going to see 340 to 320 in the relative near future unless we really get a massive dump and Trump keeps tweeting. That's pretty much the only thing there. All right. All that being said, point of control here, 397. That's basically the macro point of control, or the variable interest, if you will. When we combine all that together, there's a lot of confluence there at the $4 range. So it makes sense that $4 should hold as a support, pending Bitcoin doesn't dump. And other than that, there's not like a heck of a lot here telling us we're going to be shifting down. Truth is, MACD is trying to diverge a second time, but we already kind of stopped out that previous downtrend. And then money flow index, this is the only concern I have here. Money flow index is below the RSI. That's generally construed as like a weakness, kind of a back end weakness, if you will. I'm not even going to try to say it's a hidden bearish divergence, because I think nothing is hidden. But the truth is, when you see MFI below the RSI, usually it implies that people want to try to buy, but there's more selling pressure because there's less money coming in. Okay, money is not flowing in, so to speak, compared to the recent past, and that decreases sustainability in this range. So that's SUI in a nutshell there for you. Last but not least, let's talk about this bear flag here on XRP and kind of call it a day. So once again, don't shoot the messenger, folks, but this is just a chart pattern. It's not indicative of continuation lower. In fact, we could very well balance off this trend line and continue higher. But just know that bear flags in general, they do tend to play out. They're a fairly high success rate, mainly because they originated from the upside, and there's this continuation pattern where the bulls continue to lose buying pressure and the bears continue to start selling. They build a resistance wall. Let's see if that's there. We can see with open interest, we take a look here. There is a significant amount of open interest at 312. So that's actually very good. That reinforces support in this upper trend, or this higher low that we're creating. So that is actually very, very much a good sign, something you want to look for when you see a flag pattern. We also see here liquidation delta is at break even. It doesn't give me a lot of confidence. I don't like trading break evens, just based on the simple fact that it's usually a shift in momentum, and there's a very good chance that now that there's just as many bulls as there are bears in the market, that implies we could be switching gears, right? The price can shift bearish. There's not a tremendous amount of liquidation. Once more, 3 to 305 is that support range for us for this coin, and we can see that emphasized here in the lower range of this liquidation. So all in all, that's not really a bad back end, but it's not like super comforting either. So I don't get the warm fuzzy feeling from this. Let's take a quick look here at the macro. We're still over our ascending trend, which essentially is just the 20-day SMA. So if you were to draw a trend line out there, that's kind of what we're looking for. I'll go ahead and post a new playout chart on our Twitter, Telegram, Discord that has all this information on it. But we're remaining above, so we haven't broken bearish yet. All right. So even though there's a bear flag, doesn't mean it's going to play out, but it does increase the odds, especially with us shifting neutral on the bearish somewhat of a bearish sentiment on the liquidation or the longs versus shorts. We can also see money flow index is dipping below the RSI. Once more, not a great sign. Stochastic, we don't care about that too much just because we had a significant pullback here recently, but we're below our moving average. These are a lot of like bearish signs on the daily. So to me personally, I don't like what I see here. If I'm going to consider a short, I'd take a short to the $3 range and see how that level holds. $3 was a previous resistance that was tested only one day before it broke to the upside. So there's not like a ton of things confirming that that's going to be a strong support level for us. It's just a psychological support level in general. Large round numbers have a tendency of being like that. All that said, we'll take a look here. We can see we're under the 50-day SMA, also the 20-day SMA, and not really a favorable sign. We've broken under 50 on the RSI. Stochastic RSI is pulling back. There's a lot of reasons why we're not in great shape here. So I don't like what I see here. I think the bear flag will play out. It really just depends on how Bitcoin performs, though. If Bitcoin goes sideways and down, which is anticipated here for the short term, I think we'll see something similar to XRP. Are we going to see a massive dump from XRP? Probably not. Just somewhat of a range between $3 and $3.30, which is kind of where we're at there. So all in all, that's the general consensus. Not too bad, right? All right, one last thing too, before I let you go, jump on over to BitUnix too. Make sure you register here. Congrats to our community members. If you did register, if you did use my link to register in the past and you're one of the top 10 qualifiers, I'm gonna be finding out more information on the details here. Looks like an Apple Watch was a reward there, which is awesome. And then of course, make sure that you go to the Rewards Center and check out the rewards here for that. Okay, so it's just something to kind of be mindful of there. And be sure to take advantage of that, because these benefits, the trading bonuses, they do expire after, I think, 7 to 14 days. I think it's 7 days, as a matter of fact. Anyways, check it out. Feel free to reach out if you have any questions. I'm in contact with our affiliate partners there too, just to make sure I understand the details there. Jump on over to Twitter, Telegram, Discord if you want. And by the way, this is me. I did change my photo to include Cooper, our young son there, 6 months old tomorrow. Pretty awesome. Either way, I appreciate you. I look forward to seeing the next one. Have a great rest of your day. Take care.